Good morning everyone and welcome to Morning Markets from True Potential. Today we're going to focus in on another weekend of activity in the financial sector, in particular the acquisition of Credit Suisse by UBS. On Morning Markets over the past week, we've been discussing the challenges that the banking sector in particular has faced. Over the weekend, we heard that Credit Suisse would be acquired by UBS. This at a time of significant stress within the banking system as we look back over the past 7 days with Silicon Valley Bank, challenges with Signature Bank, and then Credit Suisse coming to the fore last week. Looking at the transaction itself, it is very much focused on trying to mitigate some of the risk that is there from Credit Suisse, in particular focusing in on the terms that have been offered to UBS in terms of making the acquisition, which are very favourable with significant backing from the Swiss National Bank and indeed the Swiss government. I think also looking at how the transaction was structured, very much done in a period of time of stress and challenge, and a change to Swiss law to allow the acquisition to go through without a shareholder vote, and indeed quite material haircuts or diminution in value taken by bondholders as well. And I think that's something that we'll probably hear about over the next couple of days. Also looking at some of the why does this matter and what is the key challenge that we're really looking at. It's about the confidence in the financial sector, and we've seen central banks over the course of the past 7 days make a number of actions, and indeed overnight we've heard from 6 central banks that they will be providing dollar swap credit lines into financial businesses. That's important because those businesses don't have to go into the market to borrow, and we know that has been challenged at this point in time. Looking to the week ahead and what can we conclude from all of this, very much it brings to the fore the activities of central banks, looking at what we're going to hear from the Federal Reserve and also what we're going to hear from the Bank of England this week. In the case of the Federal Reserve, over the course of the past week, expectations have changed quite significantly. 10 days ago, it was about a 0.5% increase in interest rates. We moved back to 25 or 0.25% increase last week. And indeed, looking at the screen this morning, even that is being questioned as we speak. I think the other key thing for us all to be focusing in on from central banks this week is how they're assessing the implications of what we're seeing within the financial and indeed the banking sector for the wider economy, both in terms of the provision of credit, but also the cost of credit. I'll leave it there for today. Please do join us through the rest of the week.